This video, I'll do a recap of my market predictions for 2024 to see how I did, as well as give you my 6 market predictions for 2025. Welcome back. This is episode 235. Happy New Year. I hope you all had a great holiday and your year is off to a wonderful start. And I'm continuing my tradition, my third annual market prediction for the upcoming year. And it's a way to have some fun, see how good I am at predicting the future. And I'll also review my predictions for the past year to see how I did. If you want to listen to that episode, you can go back and listen to that episode. It's episode 183. So you could head over to retirewithryan.com/podcast/183. As every year starts off, a lot of us make New Year's resolutions. We're looking to get our finances in order, maybe lose weight. Well, I can help you to get your finances in order. If you haven't checked out a copy of my recent book, Fiduciary, I'm offering the ability for you to download the entire book, not just the first chapter, for free. And it's a great way if you're looking to hire a financial advisor, how to find the right advisor, how to interview financial advisors, how to get the most out of that relationship, some advice on investments, on retirement planning, on estate planning. There's a whole lot of great information in this book. And if you head over to retirewithryan.com, you can click on download a free copy, electronic copy that is, of the entire book. You can also head over to Amazon and buy a hardcover copy or soft cover. But if you are okay with electronic copy, you can download that there. So again, head over to retirewithryan.com, and all you'll need to give up is just your email address. So let's first start with what my market predictions were for 2024 to see how well I did with those predictions. So I made 6 predictions last year, and let's start out with the first, that being what would the S&P 500 do for 2024. So if you're not familiar, the S&P 500 are the largest companies in the United States, and it had another great year. It returned 23.8% for the year, and it closed out just at 5,881. That's the value of the S&P 500 index. If you add in dividends, it was close to 25%. This was after a superb 2023. In 2023, the S&P 500 returned a little under 25%. So we have back-to-back 25% years. That hasn't happened for a very long time. And you're probably seeing the benefit of this in your 401k and your investment accounts. If you've been invested in the stock market over the last couple of years, you should have seen a lot of gains in your investment accounts, which is great. Now, this gain of almost 24% was despite a decline of 2.6% in December of 2024. So the index was even higher going into December. In 2024, got off to a great start. The first quarter of 2024, the S&P 500 returned just about 10%. So it got off to a great start, but in April wasn't a great month. It declined about 4.23%. However, then it came back strong in May and made 4.94% and then 3% in June. So a lot of great months in there, just a few negative months. So overall, a fantastic year. And if you look at the historical average of the S&P 500 since 1927, and so that's a 98-year period, it has declined 32 times in those 98 years. So 1 of every 3 years is a negative year. Despite that decline, it still had a phenomenal long-term return of over 10%. And those average declines have been 14%. So at some point, we will definitely see a decline in the S&P 500. Hopefully, it's not a significant decline, but at some point, we will have a decline. So my prediction for 2024 was an 11% return for the S&P 500. So I was a little too bearish. I wasn't as optimistic as I should have been. Who would have known that it would have almost a 25% return when you factor in dividends? So I missed the mark on that one somewhat, but I'm thinking I'll give myself a check mark on this because I did predict a positive return, and that's what we did see. My next prediction was whether growth stocks or value stocks would lead the markets. And for those that are familiar, growth stocks are stocks of companies that are growing their earnings. And these are usually technology, biotech names. Some examples would be Apple, Nvidia, Microsoft, Amazon, Tesla. Those are some of the largest growth stocks that are located in the US. While value stocks are more established companies, more your blue chip companies, some of them can be trading at a value or a discount, but usually it's just your more established companies that are not growing at a fast rate like some of the growth companies are. So examples of these, and they're things we use every day: Berkshire Hathaway, JP Morgan, ExxonMobil, Walmart, United Healthcare. These tend to be more financial, industrial companies. And since 1927, value stocks have outperformed growth stocks by an average margin of 4%. So over the long term, value stocks have been where you'd want to have your money invested. But in recent years, growth stocks have been on a tear. If you track growth stocks over the last 13 years, they have outperformed value stocks in 9 of the last 13 years. And an easy way to measure this is 2 indexes. One is known as the Russell 1000 Value, and the other is the Russell 1000 Growth. So those are 1,000 stocks that represent those 2 indexes. So if you look at the change of those indexes over the last 13 years, the Russell 1000 Value has gained roughly 154%. The Russell 1000 Growth has gained 254%. So you're starting to see the difference of significant outperformance in growth. And there's a lot of funds that invest in these. 2 that I track. One is the Russell 1000 Growth ETF from Vanguard, which the symbol is VONG, and that returned 33% in 2025. And this is following a 43% return in 2023. The Russell 1000 Value had a pretty good year in 2024, but it only earned 14%. And that was following an 11% return in 2023. So certainly a great year for both indexes, but you can see where growth stocks have really been leading the market and makes people question, if they have been a value investor, whether they should change that strategy. So my prediction for last year was growth stocks would continue to outperform value stocks, and I was right. So I'll give myself a check there. So for keeping score at home, so far I'm 2 for 2. So my next prediction was whether large cap stocks or small cap stocks would lead the market. So you can categorize companies or stocks based on the size of the company, what it's worth. It's also known as its market capitalization. And very simply, that's the share price. So let's say a stock is $20 a share times the number of shares that that company has. So that gives you a value, and you can then put the companies into different groups based on those values. Large cap stocks are usually a value of 10 billion or more. Small cap stocks are a value of 2 billion or less, and then mid cap stocks fall in the middle. So why I mentioned this is that if you look at these categories of stocks from year to year, you'll see major differences in performance. So the most common measurement of large cap stocks we just talked about, that's the S&P 500. The most common measure of small cap stocks is the Russell 2000. So if you look at these indexes, you will see that large cap stocks, what sectors they're more concentrated in, they're definitely more in the technology sector, consumer staples, where small cap stocks tend to be focusing more on healthcare, financials, and industrials. So that makes small cap stocks more cyclical than large cap stocks. So in the last 13 years, large cap stocks have outperformed 9 of 13 years. It's also large cap stocks measured by the S&P 500 have outperformed small cap stocks for 4 straight years, including 2024. So my prediction for 2024 was that small cap stocks would outperform. Unfortunately, I missed the mark on this one. Small cap stocks did have a good return, but they only earned 16.9%, whereas the S&P 500, as I just mentioned, earned 25%. So I did not get this prediction correct. But if you look at the total return over the last 13 years, large cap stocks have made about 206%, and small cap stocks have done pretty well, about 145%. So now I'm 3 for 4. So my next prediction, or 2 for 3. My next prediction is gold or Bitcoin. What was going to do better in 2024? And this might not think of something that you're thinking about because, Bitcoin is highly speculative, but it is what's known as a non-correlated asset, meaning it doesn't always track the performance of the stock market. However, in more recent years, Bitcoin does seem to move with the stock market. When you have the stock market up in a day or a week, usually Bitcoin will be up. When Bitcoin is down, usually the stock market is down as well. People generally tend to think of gold as something that can be a good hedge against inflation, because if we have high inflation, there's more demand for gold. It's not always the case. It's not a perfect solution that if we have high inflation, gold will go up, because even in recent years when we had higher inflation, gold really didn't do much as far as change in price. So Bitcoin had a horrible year in 2022. It was down 81%, but it had a great year in 2023, making about 150%. And last year in 2024, it made 121%. Gold last year made 26%, and that was coming off a good year as well in 2023. So Bitcoin did again outperform gold by a significant margin, 120% versus 26%. Much of the gain in Bitcoin in 2024 was really fueled by the launch of spot Bitcoin ETFs. These are exchange-traded funds, which I'm a big fan of, a type of mutual fund that are beneficial for a lot of reasons for investors that are directly investing in Bitcoin. So these spot Bitcoin ETFs were launched in January of 2024. I believe January 10th was the day that the SEC approved spot Bitcoin ETFs. There's about a dozen of them, and one of the biggest is the iShares Bitcoin Trust. The symbol is IBIT, and it's a way that if you want to participate in Bitcoin, the good and the bad, you can buy these ETFs. So it's an easy way that you can track the performance of Bitcoin. So again, Bitcoin had another great year, outperformed gold, and I was right with this pick also. So if you're keeping score, I'm now 3 for 4. My next prediction was whether or not domestic U.S. stocks would outperform international stocks. Another area of the market that you can invest in are international stocks. So when we think about investing, a lot of times we think about the U.S. because that's where a lot of my listeners probably are. However, about 40% of all publicly traded companies are listed in the U.S. So that means there's another 60% of stocks that you could invest in that are listed outside the U.S. So it would make sense that you probably would want some international exposure to your portfolio, being that if you just solely focused on U.S. stocks, you'd be missing out on a whole universe of investable international stocks. And there's a lot of different funds that you can use to track to see how the international markets are doing versus the U.S. markets. And one way you can do this is through a ETF that I use for clients called SPDW. That's the State Street Spider World X US ETF. And an easy way to compare that would be to compare it to the S&P 500 ETF. Spider's S&P 500 ETF is SPLG. Now, over the past 14 years, SPLG has outperformed SPDW, so SPLG being the US ETF versus the international, 11 of 14 years. And over that time frame, SPLG, as I mentioned earlier, the S&P 500, has returned about 205%, but SPDW has returned just 82%. So you really would have been hurt by being diversified in international stocks over the last dozen or so years. And I'm all in for diversification. I'm definitely a believer in it. But if you've had a significant amount of your portfolio in international stocks in the last 14 years, that's really reduced your returns because of the underperformance of international stocks. So it's up to you how much international stock exposure you want to have. Probably some makes sense, but in recent years, it's definitely hurt your portfolio. So my prediction was that U.S. markets would outperform international markets, and that did come true. In this past year, the large cap S&P 500 returned, as I mentioned, about 25%, and SPDW returned just 4%. So really, one of the worst areas of the markets that you could have been invested in over the last year was international stocks. And my final prediction was regarding interest rates as measured by the federal funds rate. So the federal funds rate is the rate that the U.S. Treasury or the U.S. Federal Reserve sets banks to borrow money from. So banks need to borrow money from the Fed to manage their operations. And what the Federal Reserve tries to do is control interest rates in the economy by setting this borrowing rate. So their target for the end of 2024, at the beginning of 2024, the target for that federal funds rate was between 5.25% and 5.5%. And it ended the year at 4.25 to 4.5%. My prediction was 4.75 for the ending of that rate in 2 rate cuts. So there were actually 3 rate cuts. So there were 3 times that the Federal Reserve actually lowered interest rates. And it's been talked about before that it's a very difficult job for the Fed. They're trying to do the impossible. They're trying to land another plane on the Hudson like was done before, because they're trying to make sure they don't don't lower rates too quickly, that they cause more inflation, and also that they don't wait too long to lower rates, that they put us into recession. So it's a very, very difficult thing that the Fed is trying to do. And I'm going to give myself a check mark that I predicted this accurately. I wasn't 100% accurate, but I was within 25 basis points of the prediction, which was extremely close. So if you're still sitting on a lot of money in the bank that's paying you very little interest in your checking or savings accounts, all the big banks are notorious for doing this, even smaller banks. You still have time to transfer that out to something else like a money market, a short-term bond fund, maybe even a CD to earn more interest on that money for 2025. So head over to episode 116, which is 7 best short-term investments to grow your money, if you want to learn more about what you can do as far as moving that money around to earn some more interest. But, again, this was another prediction that I got right. So that gives me 5 correct predictions out of 6. So that is a phenomenal record. I went 5 for 6 last year too. I wish I could say that I could do this all the time. I probably just quit while I'm ahead, because it's very hard to do this, right? I mean, you could flip a coin on a lot of these predictions, but I've been fortunate in the last couple of years. So now on to my predictions for 2025. So first being the S&P 500. What is my prediction? I'm predicting a 10% return, that the value of the S&P ends the year at 64.69. What about growth or value stocks? I am going to go in on value stocks. I believe that growth stocks have really overshot significantly. Growth stocks are really concentrated in some of those technology companies that I mentioned before, and I think there's going to be a pullback in that. So I'm definitely favoring value stocks in 2025. Large cap or small? I'm going small cap again. I think small caps are due for their time in the sun. They're due for a rotation, outperforming large cap. Some of the headwinds for that are definitely lower regulatory burdens, lower regulatory costs that could be coming with the Trump administration. Bitcoin or gold? I know a lot of people are very bullish on Bitcoin. People are predicting Bitcoin going to $1 million a coin. It's currently a little under 100,000. But I think that might have overshot a little bit too, with the enthusiasm that's come from the Bitcoin ETFs, as well as maybe a embracement by the Trump administration of Bitcoin. So I'm not so sure some of those things are going to happen. So I'm definitely leaning in towards gold as a prediction this year. International or foreign stocks, I'm going with U.S.-based or foreign stocks. I'm going with U.S.-based stocks. I'm going with the S&P 500 again over SPDW. I still think that the U.S. stock market is the place to be. And my last prediction is how many rate cuts will there be in 2025, and what will the federal funds rate be at the end of the year. I'm of the belief there will be 3 rate cuts, and the federal funds rate will be somewhere between 3.75 and 3.5% to end the year. So again, these are predictions. As I said before, educated guesses at best. Flip a coin, right? That's essentially what's going on here. But it's fun to make these predictions. We can go back at the end of this year and see how I did. So make sure that you check in on me next year regarding this. And I want to congratulate you for staying the course if you did with your portfolio in 2024. As I said before, I got off to a good start, but there were some rocky months in there. And, it's always good if you have an asset allocation, you can stick with it. That's really going to be your best bet for long-term investing success. So best wishes for 2025. And as a reminder, if you haven't downloaded a copy of my book or purchased a copy, you can download a free copy by going to retirewithryan.com. And if you have a listener question, you can always head over to retirewithryan.com and click on Ask a Question to leave your listener question. Have a great rest of your week and a wonderful 2025. Talk to you next week.